If you just inherited an IRA, the biggest mistake may be the one that feels the easiest. Cashing it out, moving it too fast, or ignoring it because you are overwhelmed. Again, emotions. This video is especially for someone who recently inherited an IRA as a part of a larger inheritance of $500,000 or more and wants to avoid costly mistakes. Because inherited IRA is not just another account. It may come with tax rules, deadlines, family pressure, of course, and retirement decisions that need to be handled in the right order. Hi, my name is Tommy Cloud. I am a certified financial planner and certified kingdom advisor. I founded Third Act Retirement Planning back in 2000. I help people all over the country who've received $500,000 or more in sudden wealth to make wise financial decisions before taxes, family pressure, and rushed investing create costly mistakes. In this video, I'll walk through the first decisions to think about if you inherited an IRA. This is educational. It's not personal financial, tax, or legal advice. Your situation may depend on the type of IRA, the type of beneficiary you are, tax rules, deadlines, and your broader financial plan. Let's talk about decision number one. Do not cash out the inherited IRA before you understand the tax impact. This is one of the most common mistakes. Someone inherits an IRA, sees a large balance, and thinks, I'll just move this into my bank account. You're getting ready to get slapped upside the head with a tax so big it's going to make you cry. You're going to be bruised and knocked up for days. But if it is a traditional IRA, the money you withdraw may be taxable as income. That means a large withdrawal could push you into a higher tax bracket. And the brackets go all the way up to 37% now. It could also affect other parts of your financial life. For example, I've seen people take large IRA distributions because they wanted to pay off debt or help the family, only to realize later that the tax bill was much bigger than expected. 30% of $1 million is $300,000. The money felt available, but it was not all theirs to spend. There's always taxes on the balance sheet. I talk to my clients about that. Any of them that have traditional IRAs, 401ks that are traditional, there's always taxes on the balance sheet. There's no way to avoid them. So it's just how much are you going to pay of them? And that will involve many factors on filling up those brackets as you move forward in your career or in retirement. Now, let's talk about decision number two. Find out what kind of inherited IRA you received. Was it a traditional IRA? Was it a Roth IRA? Was it a simple IRA? Was it a SEP IRA? Was it from a spouse, a parent, a sibling, or someone else? Those details matter. A spouse may have different options than an adult child. A Roth IRA may have different tax treatment than a traditional IRA. It almost certainly always will. But I say may here in this video just to cover my bases. Some beneficiaries may have to follow the 10-year rule. Some may have annual required withdrawals. You do not need to know every rule by heart, but you do need to know this. Do not assume the rules are simple. Before you make a move, gather the account statement, beneficiary paperwork, date of death, and any notices from the IRA custodian. Decision number three, understand the 10-year rule. Many people who inherit an IRA from someone other than a spouse may need to empty the account by the end of the 10th year after the original owner's death. But here's where people get in trouble. Some beneficiaries may also need to take annual required minimum distributions during that 10-year window, depending on the facts. So the question is not, do I have 10 years? The better question is, what withdrawals, if any, are required each year, and how should those withdrawals fit into my tax plan? That is a very different question. Decision number four, do not let family pressure decide your IRA strategy unless they're willing to pay the tax bill. When someone passes away, money decisions can become emotionally fast. A sibling may want you to split money quickly. A child may ask you for help. A parent may expect you to pay for something. Or You may feel guilty because you received money after someone you loved died. That is real. But an inherited IRA has rules. And if you make a fast withdrawal to help someone else, you may create a tax problem for yourself. I've seen people give away money before they knew whether their own retirement was secure. I've seen people pay off a mortgage immediately only to realize later they needed more cash for taxes. And I've seen people invest inherited IRA money without a plan, then panic when the market dropped. Decision number 5, coordinate the IRA with the rest of your life. An inherited IRA should not be handled in a vacuum. You need to look at your income, retirement plan, your debt, cash needs, taxes, estate documents, and family goals. For some people, taking withdrawals over several years may make sense. For others, timing may depend on work income, retirement age, charitable goals, and other inherited assets. If you have charitable goals, you can use QCDs, and you won't have to pay any income tax on those up to a certain limit, depending on the tax year. So, when you're doing all this, you may need to coordinate with an accountant, whether it be a CPA or an enrolled agent, an estate attorney, or a financial planner. The goal is not to beat the IRS. The goal is to make clear decisions before rushed moves create damage. You want to make the money coming out of this IRA, of course, as low as you possibly can over time. And of course, it may happen over time depending on how much it is and depending on what your current income is. So let's recap. If you inherit an IRA, do not cash it out right away. Find out what kind of IRA it is. Know what kind of beneficiary you are. Probably common sense on that one. Understand whether the 10-year rule or annual withdrawals may apply. Watch the tax impact. And do not let family pressure force a fast decision. An inherited IRA can and should be a blessing, but it can also become a costly mistake if you move too quickly. We've talked about in other scriptures, and I believe the verse is on my website, that God, I believe, gives an inheritance and adds no sorrow to it. And so, and how does that happen? That happens with wise planning, happens with prayer, and it happens with knowledge. You want to get knowledge and wisdom, which starts with fearing God. If you have recently received $500,000 or more from an inheritance, including an IRA, and you are not sure what to do next, you can apply for a sudden wealth planning session with me at no cost. There's no sales pressure, and there's no sales pitch. Just use the link inside the description. On that call, we will talk through what you received, what decisions may be urgent, what tax or retirement issues may need attention, and what your next wise step should be, at least in my opinion. This session is not for someone looking for a hot stock tip or a quick answer. Jim Cramer, I think, has a TV show handling a hot stock tip, and I think there's countless amounts of newsletters for hot stock tips like Motley Fool. These meetings are for someone who wants a thoughtful plan before making major decisions with sudden wealth. Thank you for tuning in. And if you liked it, hit like, hit subscribe. We'll stay in your algorithms, and you can see more valuable videos like this in the future. And until next time, my name is Tommy Cloud, signing off on Sudden Wealth Stewardship.